So the PSU basket of stocks have actually re-rated significantly over the past few quarters, right, Vetri? So amid the large valuation discounts which they had, and perhaps high dividend yields that they are actually giving, and also plausibly the possibility of a privatization of some of the names, right? So, but do you think this trend is going to sustain or continue for long term? And also, do you expect or is there any risk for the growth sustenance of these businesses?
Sure. Yeah. Thanks, Niranjan. What I always say is, look, the case for investing is ownership dependent only up to a point, because it's actually driven more by how the fundamentals of that business compared to how other businesses in the same domain are performing. So I don't think of PSUs as a basket, just like I don't think of investing in, argument's sake, the Tatas as a business or the Birlas as a business, because that is not the way you invest. You look for companies which have a competitive franchise, which have the ability, they have the right to win, they are competitive in the businesses in which they operate. They obviously need to have good management, and then you want them at the right valuation. So in that sense, whether the management is PSU or private actually has no relevance. I think PSUs as a basket, we know for many reasons, were trading very, very cheap relative to their private sector brethren for many years, and particularly 2021 seems to have marked the inflection point where their valuations have moved up. Good, but I would still say better to be stock specific rather than try to play the basket, because then you would be perhaps arguably be buying the wrong company as well, and that's not a good reason to invest.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.